interesting things are happening with this currency pair. So first off, read this disclaimer carefully. Then, of course, do your good deed of the day by liking and subscribing. New Zealand dollar slash the US dollar. So, 1.8% from the 52-week low, 12.7-ish% away from the highs. So, here is the chart, weekly data points, and this is, pretty, darn big picture. So I do find some time cycles, but they have differed a bit when it comes to duration. But you see that there's something around here that is a bit time cycle-ish. So there is the expectation that some kind of major low is around the corner for this pair. These time cycles project around 2024, so that is, a bit further out. But, it basically is one of those pairs that go up and down big in these major cycles. Yeah, another thing that I find interesting at this point is the very real potentiality of horizontal support. So just follow the line. We have a cluster of support here. Very important support back here. A bit of a cluster, and you could also argue that this is part of that horizontal level. You could certainly make another case that we have an absolutely humongous head and shoulders pattern. Very, very big head and shoulders pattern. So there are multiple things happening with this chart. So let's explore further. So going here to the daily data points. So we are seeing some action from the bulls, but the most recent low, let me draw it in, this low is lower than this, and that is the confirmation that we still basically have a downtrend here for the New Zealand dollar. When we look at these other indicators, RSI is rather low. MACD also is in a low area that previously has formed the lows. So let's look back. This previous time was back in 2020. So let's find that. Well, was it 2020? Yeah, 2020. So here we got a similar low level on the MACD, and it formed a key low. The other time here is back in 2018. Yeah, that's also around here. That formed, a very key low. So there's something a bit interesting here in terms of potential lows being formed. We do have something a bit double bottomish here on the accumulation distribution. And we have some bullish divergence here on the RSI in the sense that we have higher lows on the RSI here. So I write horizontal support and I give the bulls a 3 here on the technicals. It's a bit bullish, but not like strongly bullish yet. So here is the seasonality of the pair. Looking in red here over the last 10 years, this is very interesting. It becomes rather bullish for New Zealand leading into early July. In blue over the last 7 years, it's more bearish. In green over the last 5 years, it's a bit messy. But overall, there's a bit of a bullish lean leading into early July, meaning New Zealand, it does have a tendency to outperform the US dollar. To the left here, over the last 5 years, June is bearish. Last 10 years, from June to July, seasonality improves. Big picture. Last 20 years, June closes higher 60% of the time, and July is slightly more bullish than bearish. So it closes higher 53% of the time, and on average, July does post a 0.6 gain for the New Zealand dollar. So that is bullish. So I think I give a 3 on seasonality as well. It is bullish, but it's not like strongly bullish. When it comes to Forex, we could use also the stock market ETFs as a bit of a proxy on investor expectations about the fundamentals of these two economies. So yeah, the NZD is the New Zealand stock market ETF, and the SPY, of course, is America. So we do see that New Zealand, it's been underperforming, systematically the American stock market. We go here to the daily data points. There is some low here being formed. You could certainly make a case that this looks very horizontal-ish. It is obviously different from what we have seen before, because if you see this is a clear downtrend. So we've gone from a downtrend to more of a consolidation pattern. So that's interesting. We see, generally speaking, higher highs and higher lows here on RSI. When we look here at the seasonality over the last 10 years in red, it is obviously much more favorable to America. Same also over the last 7 and 5 years. I will lean slightly more now on what I saw in the charts than the seasonality, so I will give this very modestly to the bulls, so just a 1 here to New Zealand. The more classical way to do fundamental analysis of currencies, that is of course to look at macros, interest rates and stuff like that. The issue with that is that a lot of these data points are very quickly priced in to the currencies. But the way to get any kind of edge in investing is to sort of find something that is about to matter, that is not fully priced in. And what is interesting is definitively what we saw in when comparing the New Zealand and the American stock market. On the charts, we did see some kind of low being formed. If this is interpreted as an opportunity, then people will buy into the New Zealand stock market with the expectation that there could be some outperformance, and then they would have to buy the currencies as well. So here are some long-term correlations: 71% positive with the S&P 500, 40% with gold, 89% with the NZD, which is the New Zealand stock market ETF, minus 80% with the dollar index. So clearly like that negative relationship. Not a huge shocker, but it is interesting still to see that it is minus 80. It's not like minus 99. Looking at daily data points, 82% positive with S&P 500, 25% with gold, 89 here again, so 89 is repeating. Interesting. It's a very stable correlation, and then minus 74 with the dollar index. So what happens with the New Zealand stock market is going to have an impact on this currency pair. So looking at the weekly data points, we have had a pretty tremendous sell-off in the New Zealand stock market as well. Let's quickly compare with the S&P 500. So this is let's compare between 2018-ish and now. So this is SPY, NZD. Let's find 2018-ish. So you could argue that maybe in New Zealand there's more value in New Zealand. Let's quickly compare the stock markets like that. Looking at price earnings, there is slightly more value here in New Zealand, and the dividend yield is, it's not double, but it's approaching, well, it's not double, but it is better, significantly better than America. So it's interesting. So yeah, some key lows here on RSI and the PPOs. So it's rather interesting here. Also on the daily data point, we see something similar. It's a situation that, while bearish, it is also dangerous for the bears. I think I will give the bulls a 2 here on relative performance, so we end up with 2.3. So the data is more bullish than bearish, and we do have horizontal support as sort of like the stop level. So I see we have some time left, so let's just run through some interesting stocks in New Zealand. So let's look at Fisher and Paykel. So here is the chart, just an absolutely spectacular sell-off. The previous time we had this RSI and PPO was during the chaos in 2011. So historically speaking, this setup has been more favorable to bulls than bears. Looking at the daily data points, obviously the bears are in control. The next stock on the list is Auckland International Airport. So let's look at the chart. So I will just focus on the chart here now, just to because we don't have time to deep dive. But here's the chart, and it is an interesting chart because we have fallen down to potential horizontal support. So let me just draw it in so it is super clear. So like that, support. There's a cluster of support levels here that could hold, and it formed lows, back here and here. Yeah, airport stocks are very interesting because they have, massive moat. Let's look at the daily data points. I mean, this is an interesting level. When you have these very noisy charts like this, you definitively want to buy low end of support or high end of resistance. So let me look at what kind of percentage moves we see here. So let's say that hypothetically you bought like near the middle. It's just very up and down, up and down. So yeah, with these very noisy charts, definitively you do not want to get stuck in the noise zone. Next on the list is Spark New Zealand Limited, 11% of the ETF. Yeah, this is the most interesting candidate so far in my very non-humble opinion, because the red 200-week moving average, obviously an extremely important resistance level. Boom, support, extremely buyable. Yeah, this was an exception because we had like a total lockdown. It was an anomaly. It is still working, but we do see that the bears were able to push us a bit below here. So yeah, we went approaching 3-ish% below it, but the 200-week moving average is definitively super interesting. Next on the list is Meridian Energy, accounting for 7.6% of the ETF. Here is the chart, weekly data points, and we are still haunted by horizontal supports. So support. So a cluster of support here, and this is also what is called a volume shelf. It is really just a price level where there's been a lot of activity. It is very true that if we lose such a shelf, that is very, very bad. So while these kinds of horizontal supports, they are very buyable, they are also extremely sellable if we lose the floor. You do not want to fall through a floor in real life, nor do you want to fall through a floor in the stock world or any kind of financial instruments, really. But yeah, this is a very interesting level. Looking at the daily data points, potentially this is a bit of a double bottom. Boom, boom. Interesting. Accumulation distribution is holding up. The final one we will look at is A2 Milk Company. 5% of the ETF. Boom. Weekly data points, massive sell-off. Massive. Then again, it's one of those situations where yes, you have a downtrend. Does that mean that it is great to short? Not necessarily the case. Similarly, here is a massive uptrend. Is this very buyable? Not necessarily. We go down big. So it doesn't matter to you where any security is. What matters is where it is going. That's the thing. And if I put on my hat, I mean, let me ask you the question. Okay, so let's say that you won 10 grand, so $10,000, but it's with a contingency. You either have to be long or short E2 milk for the coming, let's say, 3 months. If you have a profit during that period, you get everything, the 10 grand plus the profits, but if you lose, you get nothing. What would you do? I think a lot of people looking at this chart would be like, okay, maybe I will go long, because even if I just get a mean reversion, I'm more likely to get a profit. But obviously this is just purely technical. Looking here at accumulation distribution, we are seeing a bullish divergence here, but it is not yet reflected in price. So yeah, a bunch of interesting stuff here. So yeah, whatever you do, of course, you do want to let the trend be your friend. You definitively want to use stop levels because that is what the market wizards do. If you read those books, which I definitively recommend, you will see that I think almost all of them use clear stop levels. What is very obvious in those interviews is that while they of course have methods for selecting securities, what really comes through is that their number one edge is that they know when to get out. They are very disciplined about that.